Hello, you're very welcome to today's seminar. It's on the AIFMD 2 in practice, regulatory reform and market implications. So my name is Mark Brown. I'm a partner with the law firm Clerk & Lynch, LLP. I'm delighted to be your lecturer for today's presentation. My bio is at the end of this event, but just by way of background and introduction, I've been a funds lawyer for approximately 20 years. I've advised on both alternative investment funds under the AIFMD and prior to it, as well as funds structured as UCITS. I primarily have practiced in Ireland, but I've also worked in the Cayman Islands and Luxembourg, and I've advised clients from all around the world, primarily the US, but other jurisdictions as well. So here are the contents or overview of today's presentation. I'm going to start with a bit of background to the first AIFMD and then the AIFMD 2. I'm going to look at the aims and scope of this revised legislation, go through its key provisions, look at the current status and next steps, what's still to come, and then finally give some analysis of the likely market implications of this new legislation. So to start then, give a bit of background, and the background really has to start with AIFMD 1, that's the Alternative Investment Fund Managers Directive 1. So the background to this legislation really lies in what's called the Great Financial Crisis of 2007-2008. At the time, it was speculated that hedge funds had a significant impact on that crisis and exacerbated that they were responsible for some of the volatility and short selling, etc., that led to this crisis. Whether that's true or not is a matter of conjecture, but regardless, it built up a perceived need to regulate alternative funds, in particular at the EU level. Now, it can be noted that there were other international initiatives at the time, such as the Stop Tax Havens Abuse legislation in the US, which ultimately wasn't passed. But in Europe, at least, we did see initial draft legislation, which ultimately led to a directive. Now, the first drafts of that legislation were quite different from what was ultimately passed. They were much more stringent or strict. The first proposals of the AIFMD were going to prohibit the use of offshore centres like the Cayman Islands for managers based in Europe. And they're also going to prohibit the sale of any alternative offshore funds into Europe, as well as a lot of regulation on the actual products themselves. Now, there was a lot of political negotiating at the time, and the UK really was fighting the case for the sort of alternative investment funds industry, as a lot of London-based managers used offshore vehicles. So when finally agreement was reached on a directive, we had what became the AIFMD, or Alternative Investment Fund Managers Directive. So that was ultimately Directive 2011-61 of the EU. It was approved in June of 2021 and became effective in July of that year, so a very short lead-in time.